In this video, we discuss how a break of the 200-day moving average could see the S&P 500 trade possibly as high as 1340 and remain within the context of a longer-term downtrend. Before we talk about why we think it's possible that the S&P 500 could hit as high as 1340 over the next 3 weeks or so, let's recap as to how we got here. This is a weekly chart of the S&P 500 as of the Friday after Thanksgiving. And as you can see, we really had everything that we wanted. These are the parallel trend lines. Here we broke through the center region, which tends to be bearish. Usually when you get this break here, you move down to this lower line. This is weekly RSI. We broke this trend line, which tends to be bearish. Usually when you see a trend line break like this, you get lower lows. And the MACD histogram had also flipped over bearish and was ticking down. So everything looked great as of the Friday after Thanksgiving. There was very little talk about the ECB changing its stance on printing money on that Friday, especially in the short term. Now let's fast forward to as of December 5th. This was as of November 25th. Last week in here on Monday, the chatter did begin to ramp up that the ECB may relent and print money if a few things were done in Europe. And immediately that changed the tone of the market. And then midweek, the Fed came out with an unexpected announcement. We expected the ECB and the Fed to take actions. It was the timing of it that caught us a little bit off guard. And as you can see here, this is kind of an unnatural place for this market to bottom relative to what's happened in the past, but that's what central bankers can do when they start talking about printing money, and it's frustrating, but it's part of the markets, and it's something that you have to understand and account for. So as a result, on Monday of last week, we covered the vast majority of our shorts. Here, as of the close on Monday, December 5th, this was bearish here. Now this is flipped back up. RSI is now above the center line 50, which tends to be bullish. You can see here when we broke 50 here, we continued to go up. So this is now leaning bullish instead of bearish here. We also are now above this line here, and we moved all the way back up to this downward sloping trend line, which is parallel to these two lines. And maybe most importantly, the MACD histogram has flipped from a bearish stance to a bullish stance. So what we have to be open to is if we break above this downward sloping trend line during the course of this week or next week, it's quite possible that you could see the S&P 500 move rather rapidly towards 1320-ish. And as we'll show you on some other slides, it's also possible that we could move towards 1340-ish. One thing that we want to emphasize is even if the S&P 500, and this is a weekly chart as of the close on December 5th of the S&P 500 going back all the way to 2006, even if the market breaks above into this white space here and we move to 1320, 1340-ish, we want to emphasize that that doesn't really negate the bear market case or the bearish case. This is the peak that we made in the spring of 2011. And if we come up here, you can see a series of lower lows is still intact. And maybe more importantly, here's the peak in October of 2007. And as you can see, this parallel trend line fits nicely with these two peaks here that occurred in 2011. So if we come up here in this area, it doesn't necessarily negate the bearish case, even though most people will have thrown the bearish case out the window. We'll just have to keep an open mind. But as you can see, there's downward sloping trend line here. There's a trend line that bounded the market here and here that's bounding us now. And this trend line here also comes into play. On Monday, we closed right in this area. So there's nothing that says that this trend line won't remain intact and we won't just reverse here. But given the things that we showed on the previous slide, we need to be open to the fact that we could move into this white space and easily move towards 1340, 1310, 1320-ish on the S&P 500, and the bearish case would still remain intact longer term. This is a similar look now. We're looking as of December 5th on a daily chart. Points here are relatively simple. Right here is where we broke out of what's known as a triangle formation and came down. Often you rally back to a trend line that you broke, and as you can see, depending on how you draw this, that's where we are now. So the last 3 trading days we've hit a logical area of resistance, and it's possible that this will act as resistance, and this is the 200-day moving average, and that will just come back down. But we will show you briefly and on short takes, there are some reasons to believe that this time we're in a better position to break more forcefully above this 200-day than we were here and here, and that remains to be seen. This is still resistance. This trend line here can act as resistance, but if we can break into this white space here, you can again see that 1315, 1320 something, 1340-ish starts to become relatively realistic, and again that would still remain in the context of this downward sloping trend line. If you study bear markets, it's not unusual for a bear market rally to come all the way back to the original trend line off of the bull market peak, which would be in this area. One other thing that's a little interesting, here we broke into this upper area above this line. You can make an argument that this move here is similar to this move here. And if you count these trading days here, from this break here, which is similar to moving above this line here, it took 14 trading sessions to reach this trend line here. So this is November 30th. If you count forward 14 trading sessions, we could conceivably get to 1340 or this trend line here, moving like in a similar manner. If the distance covered in percentage terms and the days, trading days that it takes, it says that we could get to 1340 somewhere around, let's call it December 19th, December 20th, December 21st. So we moved rather rapidly from this trend line here up to this trend line here. A similar move would take us to this area here. And obviously there's several forms of potential resistance along the way where stocks could reverse and still keep us below this downward sloping trend line. We mentioned on the previous slide that we thought there was an increased probability, this is the 200-day moving average, S&P 500 daily, an increased probability that we could break more forcefully above this 200-day moving average. We don't want to spend a lot of time on this because you can find the explanation as to why we think that's the case on short takes. If you Google the title of the post, which is odds a little better for 200-day break, and if you put short takes on there, just look for the entry that corresponds to Shivako Capital, and you should be able to find a description of these letters and why we think that's the case. But we think it's somewhat similar to how this lines up here where we broke through, where we may break through in the other direction, and these 2 points here where the 200-day acted as support here and resistance here have some similarities. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shivako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.